Hello yet again. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you all once again for tuning in. This week, I want to start with just a couple of news stories that caught my attention, and then I'm going to get into some statistics from Ontario and a little bit from Calgary. From CTV News, nearly 500 tenants from 5 apartment buildings in Toronto are now on rent strike. This story was from October 1st. More than 100 tenants at 2 Northwest Toronto apartment buildings will go on rent strike Sunday, joining the ranks of nearly 500 residents who have been withholding payments since early summer. The deteriorating conditions at the Northwest Toronto residences, including a serious insect infestation, have gotten to the point that Canada Post has ceased mail delivery to the residences, citing unsafe working conditions. Pat O'Vanny says the building's elevators are often out of service, an accessibility concern for residents, and that the garbage chutes have not been properly maintained. If you walk down the halls, you can always smell a foul smell, she said. Wow, it seems like these owners or the building management company have really let these buildings go. It was an application on the landlord's part to implement above guideline rental increases that ultimately pushed the group into action. We can't even reach our building manager to request basic maintenance, but they're always around to tell us they're jacking up our rents. So, of course, rent increases are set at a certain amount each year, and landlords and building owners can request additional increases if they can prove they're for maintenance or something, or whatever the case may be. But obviously, maintenance wasn't top of their list in these buildings. Next up, from BNN Bloomberg, homeowners brace for mortgage payment shock amid higher for longer rate outlook. Each month that passes, roughly 2% of mortgage holders face renewal at sharply higher interest rates. Royce Mendez, managing director and the head of macro strategy at Desjardins, wrote in a September 19th note to clients. So 2% a month are renewing, and this is only from the big banks or the big institutions. So, of course, it doesn't include private lenders or alternative lenders, B lenders and whatnot. So let's look at what 2% looks like. Here's a chart from the Canadian Bankers Association. This is an updated chart, month ending July 31st. There's just over 5 million mortgages right now in Canada, and these again are with all these big banks. You can see at the bottom there, 5,083,000, and the big banks are highlighted there. So 2% of 5 million mortgages is 100,000 families every month are renewing at significantly higher rates with significantly higher payments, and of course, having less disposable income. So, of course, we're going to see that filter through the economy, and 4 to 5 years for almost everyone to renew at some point in time. Okay, let's move on to the statistics for September. Now, I don't have all the places. Sometimes people they get angry, say, you forgot about this place and that place. Actually, Ottawa is a big one. Everyone always says, it's the nation's capital, and you forget about it. I don't forget about it. I don't have the information until they release it publicly. I'm not part of that board, and it's not part of the boards on our system that I have access to. So anywhere that I don't have data from, it's because they haven't released. And there's a lot of places this month because it's only the 3rd of October when I'm recording this video. So I have most of Ontario, Calgary, but everywhere else hasn't reported, so I don't get to report on it myself. Anyway, looking at the month over month price changes from August to September this year, and you can see it's a mixed bag in Ontario. Half have had price decreases in the month of September, and the other half had increases. Now take a look. You can look through the list here. I'll leave it on the screen for a minute. Looking at Toronto, Toronto's had a 14.6% increase just in 1 month, which is pretty absurd. It was like $147,000, and this is the city of Toronto. Now, again, they didn't have many purchases or sales. They're in a buyer's market. It's like 26%. We'll see that in a few slides from now. But people are buying the higher price point homes, I guess, in September. But yeah, it skewed their numbers so that they're showing these big average increases in sale price for September. Looking at the percent change from the peak, everywhere that I'm reporting this week is still in big negative territory, except for Calgary. They're almost even with their peak, just 0.5% off their all-time high, which was in June this year. But Cambridge leads the way with 29.1%, almost 30% down from the peak pricing. And of course, followed by Southern Georgian Bay, Woodstock, Ingersoll, Durham region, Kitchener, Waterloo, London, St. Thomas, my region, Niagara region, Berrien District, Simcoe District, Hamilton, Burlington, Peel, still all above 20%, Brantford, Kingston, Grey Bruce, Owen Sound, Oakville, Milton, just around the 20% mark. And then we get into the places that are less, with Toronto actually only 7.6% below their all-time highs. Now let's look at that in terms of dollar value. I posted this on my Twitter today. Durham region leads the way, $316,000 losses from the peak last year. It would have been February, their peak. Then followed by Cambridge at $305,000. Southern Georgian Bay losses of $301,000. Peel and Oakville in the 280,000s right behind them. Kitchener, Waterloo, 243,000, and the list goes on. Everybody suffering pretty big losses so far. Of course, Toronto faring the best in Ontario with only $100,000 loss, which really is negligible considering their price points. And of course, Calgary only $3,000 below their all-time high. And now looking at the sales to new listings ratio, or what kind of a market is it for September? Again, most places are in that buyer's market. You can see them all lined up here, and they're well into it. They're not just below. The 40% is buyer's market territory, but they're well below. And Toronto is in the biggest buyer's market, but they had the biggest month-over-month price increases in their average price, which is, again, just a sign of the volatility and the unknowns in the market. Only a few places in Ontario there in the gray are in balanced markets, with Calgary being in an overheated seller's market. Their sales to listings ratio is around 77%, or should I say sales to new listings ratio. And now just looking at a few more charts here before I wrap up. This is the months of supply in Ontario, or in ITSO, the 20 boards surrounding the GTA. And you can see here the months of supply, it's about 4.1 months, which is the highest since September 2015. It looks like our inventory issues could be ending soon. A little too early to call it, but we're definitely in the range already. So another interesting chart I did this week was the vacant listings. What percentage of the listings are vacant compared with the last 10 years? And that kind of gives you an indication of, just investment, because usually a lot of vacant homes, or investors will have vacant homes when they're selling them. So again, this kind of gives a good indication of, have things increased with investors buying properties and whatnot. Starting with the GTA, you can see 2013, 29% of all new listings were vacant in that year, and now we're up to 41%. So about a 30% increase in the ratio of vacant new listings compared to all listings in that market right now compared to 10 years ago. Looking at the same data from the board surrounding GTA, the 20 boards surrounding 2013, there was 21% of all new listings were vacant, and now it's 32%. So again, there's a 50% increase in the ratio. So 50% more vacant homes technically than there was back in 2013. So then I said, let's take this a little bit further and look at the number of tenanted homes compared to all new listings. Here it is for the GTA. Back in 2013, about 10% of all new listings were tenanted. And there's been a big increase in that ratio by 60% in 2023. Now 16% of all new listings in the GTA were tenanted. And looking at the board surrounding the GTA, we went from around 6% in 2013 to 9% this year. Again, a 50% increase in that ratio. So again, not a big surprise. It makes sense. There's more investors that have purchased homes throughout the pandemic, especially. And now there's a lot more of these coming up for sale, whether there's an increase in the vacant numbers of the tenanted number of properties. Anyway, let me know what you think in the comments as always. And until next week, I'll see you then.